live stream here. Man, apologies for the late start. It's just been a crazy morning for me here. Just had to finish a call. Talked about some really great stuff with rendering processes. Uh, that was really fun. So, anyways, going straight today, we're gonna cover the markets. We're gonna cover what happened, the disaster that happened 2 days ago. A little bit of a recap, and I'm gonna gripe a little bit about Few. It was an attempted pump and dump that tried to defraud essentially the whole Twitter space. So we'll talk a little bit about that and one of the dangers facing this space as well. We'll also talk about both the microeconomic and macroeconomic situation here, because right now, yeah, people are asking me if I'm bearish or bullish, and that depends on the time scale you're looking at things. So that is going to be one of the key discussion points of today's episode. And finally, today, we have a very special guest. This is the first time I'm bringing a guest onto this channel, which is great. So he's going to come in around 20 minutes or so, and we're going to talk a lot about NFTs. So non-fungible tokens just suddenly got all that heat, both positive and negative publicity over the week, but there is a lot going on in the NFT space, and this is something that we definitely don't want to miss out for. So what we're going to bring on is, halfway through the episode, we're going to bring on Yatsu, from the CEO of Animoca brands, and he is someone that you want to talk to about NFTs because he was very involved in early CryptoKitties, in his company especially, and then they have Sand and also Rev right now on the market, and all fulfilling that gaming and NFT space. So that's going to be today's special episode for us today. We got a lot of people. We got Cindy Lee, George Goon, Michael Sato, Amit, Misara saying notification squad. Awesome. We got Amit also. Don't talk about Few. It is disgusting. It is absolutely disgusting. I think we definitely need to look at it because I think it was just one of the most despicable things. Like I'm still kind of almost angry from this. Like this is a situation where it was a clear attempt at from a community to defraud people, and yeah, so many people that big names in crypto were also involved in this, and I think we just need to vent out that as well. Just like, yeah, that was pretty shitty. So anyways, let's take a quick look at the markets here today. Let's make sure that I also have my my stream deck is working. Apparently not, so that's a magic. Oh yeah, it is working. All right, so we're slightly recovering from the big dump that happened 2 days ago. So we were in a pretty bad downward spiral for some time. So I think a lot of people were freaking out. Blood was on the streets. We got Ethereum continuously just dropping once, and then second dip that came along just right about the timing for Few. So that was maybe a coincidence, maybe not, but the market's overall feeling bearish, especially also the traditional markets too. I think now we're so closely correlated right now, this whole altcoin coin space and, well, traditional markets, that all of a sudden we're looking at both to see what's going on. So it's a good sign that right now we are at the kind of finding some support. So it's very clear, especially on Ethereum, that support was established at $320. So yes, we tried twice. The bears tried twice to dump. So we're just going to look a little more closely at that. I know this is like probably the worst graph, but that's just how I look at things now. Just roughly get a general feel of where our supports and resistances are. So yeah, bears started try to dump, but we held the line roughly at $320 for the price of Ethereum, and Bitcoin did not dump below 9,000. Well, check that. Yeah, below 10,000 rather. So yeah, yet again, attempt to dump it below 10,000, but yes, we managed to do it. So that's actually not too bad. That's actually beyond better than one of my worst fears. Especially, I think the situation that made me very bullish was definitely the Few incident. So we'll take a look at that. We'll just get it out of the way first. So what made me very bullish, or why that whole situation made me bullish, was what was Few? Well, Few was a Telegram group established by a few prominent members of the Twitter community, and they wanted to recreate the incident with Meme, where they can distribute a coin to themselves, and then they publicize that. Say they publicize that, release it to the general public, and then dump on us. So like, apparently Well, it's kind of funny. I mean, there was a few leaked chats. I think the most incriminating one was with Anthony. Okay, so it's this one, right? So, they were already talking about it. Few understand meme, even fewer understand rope. The fewest understand few. So they were trying, like these guys were trying really hard to push this few thing on to us in the general public. Oh, and they're going to create this coin, give it to themselves, maybe distribute it to a few members of community, and then sell it, dump it on our faces potentially. And there was a big fallout from this because they got caught red-handed. Essentially, there were multiple screenshots that were taken, and it got pretty bad. It got pretty bad because they were caught red-handed. Essentially, in fact, Anthony Sassiano got caught red-handed, saying, "You know what? We need people to dump on." Like that was the horrendous thing that they said. Let me just try to find a way to get the chat logs for this. So this one, Anthony Sassano said, "Yeah, we need people to dump on." I mean, you can't even make this stuff up, right? So they literally tried to create this token. It had no function, no use case, but they tweeted it out saying that this is super useful. This is super awesome. You guys should buy it because, well, why? Because, well, they need people to dump on. That's great. And then after this, it was really funny because there was this whole attempt to say, "Oh, this is just a practical joke, guys. Relax. It's okay. Calm down. It's all right, guys." But they're pretty much caught red-handed, right? Like it's like almost like a party. Like they were partying hard with like a bunch of drugs, and then the police came in, and like everyone had drugs over their faces, and like, okay, it was all a practical joke. It's fun. It's okay. We're just having fun. Relax, guys. It's not drugs. It's just some powder, but we all know what's happening. And that was just the extent of this. And a lot of actual very, very prominent people in crypto, especially in crypto Twitter, got caught in this whole incident, basically caught red-handed trying to show a pump and dump coin to their followers, treating us pretty much like, well, cattle or something even worse. I don't know. And the problem is like this, right? It's like I'm not sure if it's like I'm just so disappointed with the space and the behavior in the space. I mean, at the end of the day, a lot of these people are even project leaders or people who are talking about NFTs, and they've made themselves into NFTs, right? It just revealed that this whole thing is a big scam. It's just not just disrespectful, but you kind of expected better from people in this space. At least have the courtesy of hiding your username when you go into a pump and dump group, maybe. This is just disgusting. So anyways, in the end, because what happened was that they tried to plan this pump and dump, but they couldn't execute this pump and dump. So it turned out to be a situation where, they're just like, "Oh, it's a joke. We didn't launch it. It's a joke." But anyways, I hope we can recover from that. I hope that is the case. That's kind of the way it is with everything. So we'll talk a little bit about that. So luckily for us, we covered a little bit from this, and I think this is kind of the situation right now. If you look at the past few days, crypto did take a huge dump, especially in the DeFi front. So if you look at the 7-day, you zoom out, you take a look at the whole DeFi space, and DeFi space is taking a huge plummet. I mean, DeFi.money dropped down. This is YV2. This dropped down to 3,200. We got Yearn Finance also, the flagship of DeFi right now. It's dropped down to 24K. Nexus Mutual also took a dip, a huge dive. This is insurance. Then we got followed by Ren, Ava, Synthetics. OMG does a little bit of DeFi, not too much. Band. So yeah, 25% plus decreases in the past 7 days. So it's still substantial. So even though right now we're having a little bit of a push up, the kind of a micro view. So right now, like if you look in the next few days, next few weeks, the micro view looks a little bit not a little bit, understatement of the century, quite bearish. But that's crypto, right? I think something to brighten up the whole entire scene is that macroscopically, something that we discovered, and especially because now we found where our support is, we know that DeFi has legs. And I think this is quite essential to remember because a lot of people that during this phase, they're like, DeFi is a scam, it's over, blah, blah, blah. The issue here is not about DeFi being a scam or not. It's about dumpamentals. DeFi had this insane run up, right? It's not just increasing by 20%, 30%. A lot of early investors, especially investors that got in earlier on this year, and then that's why I'm kind of beating myself for not investing late, or like very, very early 2020, or either that or late 2019. During when the bear market was in full force, there were people who were investing into, say, MTA, and they got it below $1, right? The rumor here is that private contracts can go very, very low. So people who got it below $1 in like private investor around like either 30 cents or 20 cents, etc. You know, if a MTA goes up to $11, they're gonna just take profits, right? So this is what's causing that, you know, that dump, the dumpamentals, early investors who have a lot of early investments into DeFi can take profits right now, and that's what's happening. So now it's kind of a distinguishing feature. Now, in terms of doing research, you must really research what early investors got in on a coin at. This actually was brought up, kind of funny, when I was looking at MTA. This was kind of brought up during the public sale, where people were like, early investors got this for cents, guys. Why are you pushing this up to $1? And there are people who were thinking that this would dump down to less than $1, but MTA just shot up all the way, right? Following the hype. And this is where, you know, hype went a little bit too far, and caused the resulting consequences. Now we have a lot of dumps where early investors take money. They can dump to no matter what, right? They can dump to cents. In fact, most likely they got their initial investment back, so they can just, you know, AFK and not care and just dump to oblivion, right? So that's kind of why the micro is still quite bearish, is because there needs to be a profit taking round where early investors, they just take profit and they dump whatever they can, and then the projects can carry on. So that's a microscopic round. But in terms of macro, so in terms of the larger scope of everything, right now we are in a time when there's so much uncertainty in every single other asset class. And now with this tech war going on, the tech war between US and China, you already saw shots getting fired last week. And I think this is going to have ramifications, right? With Trump essentially limiting WeChat, limiting TikTok. There's Supreme Court challenges on this now. So like the story is being updated, whether or not this presidential policy can actually be enforced. But this is going to present very, very interesting consequences to the whole space, because now, tech-wise, all right, there might be a need. There actually not might be. There is a need for decentralization, and also this will also go on the finance side as well, right? This whole tension going up, restricting the flow of money becomes super key in the government's eyes, and people don't like that, right? Right now already, I think this is something that I think I always say on this channel, but if you guys are new and you don't understand what's happening in China, China has very, very severe capital controls. This means Chinese people cannot move more than 50,000 US dollars out of China per year. That's insane, right? So if you're a rich billionaire, you're pretty much got all your money stuck in China. And this is one of the reasons why USDT and stablecoins are very popular in China. A lot of people don't understand this in the West, and I think they still don't. You still watch all these channels. I think the ones that come into mind, like Tone, they're saying, oh, you know, Tether, they're just printing all this money. It's coming from nowhere. Well, actually, Chinese people are buying all that Tether up. They need a way to send money overseas, etc. So anyways, that's becoming one of the values of cryptocurrencies, and going beyond that, Bitcoin as well being not just a form of value you can transfer globally overseas without anyone, without any centralization, but also becomes a way to store value that's consistent without the government printing millions or billions or trillions of dollars, right? That's the crazy part. So that's why I think in the macroscopic view of things, you know, we just had the happening in Bitcoin, and there's a lot of tension right now in Bitcoin. Right now, Bitcoin is looking to become a little flexing a little bit. So that's kind of the word on the street. The word on the street kind of within groups is now the eyes are on Bitcoin, not just DeFi. All right, DeFi is taking a little bit of a chill pill here, but with Bitcoin, So we got some really interesting stuff going on. We got crypto Rex. Do they use anything other than USDT that you know of? So this is where it gets interesting. So there was a huge battle last year for stablecoins to get the attention of the Chinese, right? So this was huge, and this is why if you look at Chinese exchanges like Huobi, they were trying to create their own stable coins too, and same with Binance, etc. So yet last year there was this huge battle, and there was lots of FUD on both sides where the respective projects try to battle it out. For now, it seems that USDT is still the king, is still the top. I mean, PAX is very legit. USDC is very, well, in terms of regulations, much more legit, but they never really got as much traction as USDT. So there was this huge push for USDT on Tron, and then now like everyone's using USDT on Tron apparently in Asia. So that's very interesting, and a lot of new issuance on Tron. So anyways, credit where credit's due. I'm not a big Tron supporter, you guys know that, but that was the interesting case that was happening in the Chinese markets. If you want to look more, come to Asia. We definitely welcome you here. I'm based in Hong Kong right now. You're going to see a Hong Kong background on my profile very soon, but that's kind of the case. All right, going on there, I'm just trying to get all the content out before long. If you guys want to see what happened with Few and what happened, there was a great post by Blockchain Brad that kind of shows all that was happening. I think that was pretty interesting. Like there's just the amount of drama, the amount of savagery that people were willing to go. And even it was kind of funny, like they knew at this point, they're like, oh, we might go to jail for doing this, for planning this. They knew it was wrong, but anyways, that was a great tweet. So check out the tweet by Blockchain Brad and stuff on this. Now, speaking of more happier stuff, I feel like now we have the segue to not just DeFi, but now with the market opening up a little bit, I feel like now we're kind of waiting for people to rediscover Bitcoin again. And we're looking at different elements. So we're both looking at NFT space, right? That popped up crazily. So I'll save that conversation for when I talk with Yatsu on this. But also we have this market also opening up for storage space as well. So storage and compute. And this is why I had one of the calls earlier with guys doing rendering stuff, which is really cool. Use cases are expanding, but obviously I think one of the kind of key points I just want to point out here obviously is that there were failures in the past, and we must address this as well. I think a lot of these subjects are very much revivals of discussion topics that happened in 2017 but never really fully took off. And I think this is a year where we kind of re-examine this, look at where things went wrong in the past, and then try it again. And that's, I guess, one of the powers of crypto too. If you kind of think about it, you're going to face problems. You're going to face hurdles that happen. And I think this is a story with DeFi too, right? All of a sudden, back in 2017, 2018, DeFi was already being discussed, but no one really jumped on board. There were early instances of decentralized exchanges, right? With IDEX or Ether Delta, and no one liked that because it was just so clunky to use. If you ever want to do an order on IDEX or Ether Delta, it was so primitive. But overcoming those hurdles, moving this year, we saw the power of Uniswap being able to have this automated market making. All of a sudden, that was a game changer for a lot of projects who needed that extra liquidity but couldn't trust normal market makers to do it. So all of a sudden, we see this year, all the exchanges are just like listing DeFi stuff crazily. I mean, yesterday we saw Binance listing 2 big projects too. We had the Binance now has an innovation corner, and they immediately listed 2 projects that were very involved in the Binance Smart Chain. So yesterday let's see, and there was so much news on this stuff. It's crazy. Where they list burger and bake. Let me think. Let me just make sure that's right, because there's so many food coins now. I'm also like there's so many food chains on Binance. It's just like you got to make sure the names are right. Let me just double check here. This is the one we want. All right. So Neo, loans Neo, isolated margins, blah blah blah. All right, so yeah, so this was on their innovation zone, Burger Swap and Bakery Swap. So I got that right. So these are two projects that I was actually mining as well. Yeah, it's crazy. It's basically Uniswap on Binance Smart Chain, but being Binance Smart Chain is fully Ethereum VM compatible and it's faster. So now they're trying to really push that ecosystem. I see a very big difference between how Binance is treating the Binance Smart Chain and how they're treating their previous projects, because previously they hinted that projects will get listed, but now they're just listing it at a more aggressive pace. And you can see that this is due to competition. The more competition there is, the more aggressive players have to play. So this is essentially Burger Swap. They actually made it look very much similar to Binance, but it's essentially Uniswap. Basically, you can take assets, and one of the key things here that's also quite interesting is that you can switch, right? So why I have the bridge over, can bridge ERC assets to BEP, and now you can also swap if you're on a Binance Smart Chain, and this just involves a very quick switching of the network from Binance Smart Chain to Ethereum. You can also use MetaMask, but this is exactly functions like, well, just regular Uniswap. Like it's super fast, super efficient, etc., etc. There, so you can actually see that the speed at which things are being developed is extremely fast. You know, you can actually bridge assets over. Now, I actually didn't know that before, so now you can actually bridge your assets over from Ethereum to Binance Chain and then use the swap function there, which is faster. So that's actually kind of crazy. The speed that everything is moving, and that goes to how the space develops. I think in the space of 2 months, it feels like 2 years here. Like this is so much, right? From starting from all the yield farming aggregators to Uniswap clones, the Sushi Swap, the food coins, right? All your food, sushi, sake, your Moon Swap, your Moon's not really a coin, but you get the picture. And now burger, bakery. There was also sashimi and salmon, and essentially you can't even talk about food without being a cryptocurrency now. That's a scary part, right? So that's kind of the situation right now. But yeah, so right now I feel like there's a lot of people who are concerned. Oh, there's Cream. Almost forgot Cream there. I'm actually pretty big in Cream, but a lot of yield farming and a lot of stuff going on. So right now we actually have Yatsu here. Let me just go very quickly. Let me go and push out and talk to you about my podcast whilst I get this chat going on. Let me get everything started and going online. So let me. I highly recommend you check out Bitcoin Out of the Box, which is my official podcast, and it's all about bridging that knowledge gap between privileged institutional investors and us, the average retail investor. This season, we're going deep into uncovering a lot behind the technology behind what's in crypto, and also diving deep into DeFi space as well. It contains episodes not featured on this YouTube channel. It goes in a lot of detail. You can listen to it on the go anywhere you want. It's on Apple Podcasts, Spotify, anywhere. Listen to it on your car, on a run. It's going to get you enlightened in the space. Make sure you check it out. Okay, so this is the most seamless transition I can do. So hi everyone, say hi to Yatsu. He is
Hi everyone.
he's someone super famous. Actually, I didn't know how famous you were, but being a part of Animoca brand super early, you guys had a lot of exposure to non-fungible assets, including CryptoKitties. You guys were very deeply involved, and also now with Sandbox, and also Rev as well. So it's first time on a channel for you. Like this is the first introduction, but I've also obviously had a few discussions and very deep discussions on NFT space. So do you want to give a mini introduction, and I'll try to fix my camera? So right, well,
No problem. Absolutely.
okay.
really happy to be here. So as I mentioned, I'm Yat. I'm the chairman and co-founder of Animoca Brands. But my own background, actually, I've been sort of in gaming for, since the 80s. My very first job was with Atari, actually, yeah, back in the 80s. And so I have a little bit of a history there, and I've been a lifelong gamer. And then, when I moved to Hong Kong, I actually set up one of Hong Kong's first internet service providers called Hong Kong Online in the early 90s. So I'm really dating myself. And so me, being in this whole blockchain space gives me sort of goosebumps of the memories of the internet days in the mid 90s. I see it at a similar stage, and that gets me really excited. Maybe in terms of sort of what we are doing now is we've been doing sort of commercial video games with branded games now for well over a decade. One of the studios that we were working closely with and actually ended up acquiring, a company called Fuel Powered in Vancouver. It's a founder of that business, ended up becoming the co-founder of CryptoKitties in 2017. So we got a front row seat. As a result, we became the distributors of CryptoKitties in the region, became an early shareholder in what now is Dapper Labs. And we saw the potential of what non-fungible tokens could do to our industry as from a video games perspective. And so went all in, right? So we invested in Decentraland, we invested in OpenSea, we basically launched Sandbox, which recently had the Sand token launch on Binance, and of course there's Rev token as well for Formula One, but also have made multiple investments in the space. So we're not only just making our own content, we're trying to help seed the ecosystem by investing in companies. So we are also one of the first or early shareholders in Axie Infinity, last year as well. So many of the sort of blockchain gaming projects that you're seeing out there that are getting some attention, we've been involved with them for maybe in some cases 2 years now. So it's an interesting time. We've always been big believers in the space, and are hoping that will sort of evolve into something greater and much more meaningful.
That's awesome. And also just very quickly, I'm trying to get the audio fixed, but the best way, and I think this is the issue with Zoom, is that Zoom is horrific for audio. So,
Ooh.
Okay. Oh, is it louder now? Are you louder?
Yeah, I'm just changing the
Whoa.
gain.
Okay.
I'm just,
All right. Yeah, I changed my gain on. Okay. So careful, guys. Okay. So yeah. Let's. Okay. I think you're in a very. Yeah. You're in a perfect time. So great. And then I think this is super awesome. So hope that didn't blow your ears out. But I think like something that's cool about NFTs. I mean, this is something that's very interesting. I actually had a very cool background share with Yat because we are both gamers. He's a lot more OG than I am, obviously, and he's done a lot more than I have in the space as well. So lots of credits there. And I think something that's very involved in why he's one of the perfect guests right now is because with the NFC and the NFT discussion coming up, he's been there for like years now, right? Like early investor, he's like the Tencent of NFTs. I just got like equity in almost everything in the space, right? So now you definitely see a lot of opportunities, but obviously there were. I think this is something that we discussed before, right? In terms of expectation, is this, do you think that where are we in the adoption phase in your eyes?
Yeah, so we're still very, very early, right? I think my view is that I think we've kind of maybe finally crossed that where we went from the innovator stage into the beginnings of the early adopter stage. And one of the things that one of the narratives that 2 years ago we were definitely excited about was that, well, look, there's like over 2 billion gamers out there, and they could use this concept of sort of real assets in games. So there was some effort and thought done around that. But then we came to realize, actually, wait, hold on a second. There's like 47 to 50 million crypto wallets out there, and there's only 150,000 of them that have an NFT. So it became very clear to us earlier in the years that actually the awareness within the crypto community itself on NFTs was super early. So even though we're seeing right now, obviously a little bit of hype and a little bit of excitement and a little bit of things, many of the people who are coming into the space are like, what is an NFT? Oh, I heard about CryptoKitties, but I don't really know that much about it, right? Because of the non-fungible nature, you can't trade it immediately, or at least in the specific thought, you can't trade it immediately. So many of them are just like, I don't really know about this, so I'm going to move on. and they never went deeper into this. So there is an actually more sort of shorter term opportunity as well to sort of bring the early adoption cycle into the crypto community, right? So we've got a global early adoption cycle, but you've actually got a micro early adoption cycle within the crypto community, which is just broad awareness of NFTs, right? And it just blew me away when we discovered that a single digit percentile of crypto guys actually have an NFT.
Yeah, I
And
think so too. And like recently we saw like a few projects try to kick off. There's NFTs for art, there's NFTs for video games, there's NFTs for and something that's interesting. It's not just video games, but also intellectual property as well. That's kind of interesting. And now we're exploring the assets of like smart NFTs or maybe NFTs representing land, etc. So we're at this early adoption phase. Obviously, I think. For me, obviously, I wanted the 2 billion gamers to get on board, right? To immediately say, "Yo, like, let's get this. Let's push crypto adoption forward." It's potentially a low hanging fruit, but also we've been, it's starting out, and I think that the issue here is the management of expectations, right? And I think being in gaming space for a long time, you probably know that starting out isn't as easy as most people think it is, right? I think it's not going to be a magic overnight thing. And do you see that as also coming for NFTs? Like, do you see that's coming as a very slow adoption or? Okay.
Well, maybe to draw sort of take one of the things about gaming, which is amazing, is it may start slow, but when it picks up, it goes boom, right? I mean, we've seen this with mobile games, we've seen this with PC games, right? The gaming industry is one of those things where, because the game itself is fun or cool or interesting, it can have massive adoption because of the game itself, and then drives an industry forward just because of it. In fact, gaming often leads industries forward. I mean, if it wasn't for gaming, then you probably wouldn't have NVIDIA be the size that it is, or AMD, right? Because who buys graphic cards, right? It's all the gamers, right? Or you would have companies like Razer, or companies like Corsair. They wouldn't emerge. What would the smartphone be like without Angry Birds or Mafia Wars, right? Or Candy Crush, right? It's in fact the top grossing and top usage for mobile apps in the beginning was all driven by games. So I think that's why we believe that gaming is going to also drive mass adoption for blockchain. And I still believe in that, right? But I think one of the things here that's happening is that the paradigm is different. And I think the paradigm for gamers in this ecosystem is value, right? Actually, for the first time as a gamer, I can actually realize or at least maintain or have value in the time I put in, right? Spending and playing games is proof of work, and it's damn hard work, right? We're spending time, we're playing, we're doing stuff, we're putting effort, but the only one who benefits is the game company itself. And now, because of blockchain and crypto, we can actually find a mechanism, whether it's in the form of tokens or in the form of these NFTs, where I can accrue or create or maintain value, right? So that's exciting. But similar to the smartphone phase 10 years ago, people still needed to have sort of get comfortable with this until there's that breakout. I remember, because we were doing console games as well, and getting our console developers to make mobile games in 2010, it was like, why would I play on a smaller screen with limited functionality, right? It's like, that's not interesting at all. Right? And so we had an almost revolt from the developers. They're like, I'm not touching that. That's denigrating that I would be making games. I'm making games for Sony PlayStation, and now you're asking me to make a game on this like shitty little Apple. Like I'm not going to do that, right? Of course, now they're probably all working on mobile games. But that was back then, same thing, because people didn't understand it, right? And back then the paradigm for mobile games was around simplicity, bringing in people who could become good gamers with a swipe of a finger, right? That was a real innovation, making gaming sort of available for amateurs. Because until then, you needed to know how to use the keyboard and the mouse and the controller. And now I think the paradigm is value, right? And we have to educate on that.
And I think so too. And I just want to just zone in, talk very quickly, and just to answer people on the volume stuff. I'm trying to get our volumes to level, but if you can move your mic a little bit closer,
okay,
that'd
sure.
be good. Okay, cool.
Is this better?
Yeah, a lot better.
I'm literally kissing the microphone, but sure.
Excellent. Yeah, me too. Okay. So like, I hope our voices don't collide. I'm just trying to fix the volume. This is the worst thing about doing live streams. But something I want to say there is also, you definitely saw the effects of the kind of snobbiness from game developers early on, because you know, we saw some batch of very poorly made AAA type of mobile games. I mean, there was Assassin's Creed. They actually tried to bring that over so early. It was a big failure because it tried to replicate what the games did on consoles. Like it's 3D. It's the gameplay was kind of almost like Assassin's Creed. But the issue here was that the mature game devs didn't want to touch mobile because they're saying, oh, I'm doing, you know, PlayStation. It's awesome. We have all this tech here. Why touch Apple? And then the B team went on to make the games because otherwise they'll be without a job. And then it ended up being terrible games because people didn't pay attention to that, right? People didn't. It was a B team making a game, but they weren't spending full effort on it. And I feel like that's almost the case with blockchain right now, where in terms of the big companies, they don't want to touch blockchain, right? They're like, oh, you know, it's this blockchain. What's there for me here? I mean, you see all the game cycle and hype all coming on with PlayStation 5. Oh, it's you know, you got ray tracing. Oh my god, and then all this like fancy tech to make it all the graphics look amazing. But you don't see the A-tier developers moving into blockchain. And you know, I think that's good. That's expected for early tech. But what do you think would be the biggest push for big game devs to bring their A team, the top game, into crypto? And I think that's probably the challenge we're looking for, right?
Well, I mean, I think first of all, you know, when you think about the early mobile game days, it's true that the A teams from the big studios didn't enter that space, partially because the studios didn't see the money in it, and it was also disruptive to their business model. That's why they didn't embrace it. But you know, is Rovio a B team? You know, when they started it, I don't know. Actually, I think that they were actually, for what they created, it was an A team effort because what they innovated on.
Yes, and I think I need to fill that in. It's like there are many teams that are that became A teams, but I'm talking about the big AAA studios, like whether it's Epic or whether it's like, you know, the ones that already had, you know, the console game component. But obviously we have something like what's it? Yeah, your Rovio, and also who's the guys behind Clash of Clans? Yeah, Supercell. You know, they're A team, but then but they weren't, you know, they weren't around prior to mobile, right? They started off with mobile, so they became A teams from mobile, right? So yeah,
maybe, but just to finish, the teams that were building those actually came from gaming before, right? So the Supercell team and the Rovio teams are all ex-Digital Chocolate guys. So they weren't talking about people who never touched games before. Actually, they knew their stuff. And I think the difference that's happening with the early blockchain games, you know, we're talking 2017, 2018 type of stuff, right? Was that they came from blockchain guys who never made games. So that's different, right? But then, and so that's kind of like smartphone games 2010, and then around, or like more like 2009, and then 2010, 2011, you had the guys who were actually from the gaming industry and said, you know what, mobile is really interesting, and I'm not going to get, you know, my game studio to do it. I quit, and I'm going to enter that field. That was where that phase was, and I think that's the phase that is starting in the last 12 months, right? And that's kind of what we're seeing now. So you know, Sandbox, those guys are game developers for the last 10 years, actually longer than that. But from, well, you know, so they are people who know how to make games. But just like real games, you don't launch a game in 3 months, right? I mean, many of those early crypto games was like, yeah, let's go, 3 months, here we go. Here's a great crypto game. And where's the game, right? It takes a couple of years to make a really good game. And so I think the real results of the quality of what you're seeing is going to come out in the next 6 to 12 months. I really believe that we're going to get that adoption from the quality.
Hopefully, fingers crossed. I think so.
Yes.
I think so. I think like you're right in a sense that that early on it was blockchain developers making games, and then they were realizing, oh crap, making a game is really hard. It's a craft that people hone for like 10, 20 years, right? That's you know, all these studios, they actually have game developers that have been quite experienced, and you also understand this too if you look at, you know, even like something like League of Legends, their game designers didn't come out of nowhere, right?
That's right.
Both Ice Frog and Ginsu were big Dota game designers, right? They worked on the original Dota for fun, for passion, and then they started respectively League of Legends and Dota 2, right? So they came from a background where they really understood gaming, and I think that's something that a lot of blockchain guys aren't used to, where
they don't know it. They just don't know it. right?
they don't realize how much of a craft game design is, and I think that's probably the biggest problem with all this hype around blockchain gaming, where there's a ridiculous amount of expectations. You look at the whole DeFi space, and people expect 10x, 100x moon, or 100x growth in user base. But here, it would actually take time for a game developer to understand, or actually not game developer, a designer to understand. Okay, how do you make the economics of a game work around trading, because that's or trading or NFTs, or make these elements work. And it's much easier said than done. And I think that's my biggest pet peeve with this whole crypto space, where people look at all these examples. I talk like a nerd. I'm like, oh, just look at the Diablo 3 talk where they said how item trading completely destroyed their game. They're pretty much just blatantly said that and actually disabled their auction house, right? Because trading just killed their game. They just killed their core game loop. And people don't realize that. They're like saying, oh, we should add trading to Hearthstone. I mean, there's a legit.
But that's also because Diablo was designed not to have that. It's an inflationary design, right? It's a different loop, right? And so I think that's where the difference is. I think what you have here, like the example I like to give in this one is, for crypto games was originally built by bankers, right? So all the guys who are trading in crypto, imagine some guys from like Morgan Stanley are like, we should make a game, right? So that's how it started off.
We like trading, we like money, let's make a game, because everyone loves trading and money, right?
Yeah,
but,
exactly.
Oh
right.
shit!
I mean, that's exactly what we're seeing right now, or have been seeing, but silently, but powerfully, I would say. You've got a number of companies that are actually making games coming from games backgrounds. But where I think the part that has been harder from a talent standpoint is you have to find a gamer or game company or studio that has a financial ethos and a value system behind them that supports that, right? It's the same idea between sort of paid games, which was the pre-mobile, to free-to-play freemium models, right? The freemium business model was completely something that it wasn't just objection towards playing going from console to mobile games. It was the objection of, wait, I can make a game, I can work on it for 3 or 4 years, and then I sell it for $60, see how it goes per game, as opposed to this game is entirely free. And you have to create a core game loop to entice them to play and buy these virtual assets and items. It's a very different challenging mode. And many developers didn't like that idea that they were basically creating freemium games. So it was a business model disruption that also changed it, right?
Yeah.
And that's what we're seeing too. And so that gap is small, just like the mobile game developers. You have I would say it really became mainstream in terms of broader studios literally 4 or 5 years later in the mobile game space. But in between, companies like Rovio became more huge enterprises, and we saw Angry Birds plushies all over the world by that time.
Yeah, so I think it's definitely a game model, and I think it's not as easy as like I think that's definitely my pet peeve, where people who are traders, like essentially us, right? Us in crypto space, we're big traders. We love trading, obviously, because we deal with this stuff, and we expect everyone else to do the same. It's a change, it's a transition in business model, which will take time to come. So I feel like this is where a situation where, and a lot of people need to understand that video games take years to make too. So one of my biggest pet peeves where people are like, why don't Fortnite just make NFTs with their items? Like, okay, first of all, Fortnite items aren't tradable for a reason. That's part of their core monetization loop. Their monetization is on the fact that items can't be traded, and there's a purpose for that. So they can't just make an NFT, let people trade items. That would just completely kill the revenue, and it's the wrong monetization model. But now we're moving to a point where we can have a better discussion. Sorry, I'm nerding out with Yat here. There's a lot of stuff. there's a lot of depth in this, which I think it takes time. And I think just zooming out a bit before we kind of lose our audience and people who don't play games that much. Now we see the growth of NFT space, and we see this renewed interest in this space, right?
Yes.
Do you think we're moving in the right direction, though? I mean, we've seen both art. We talk a little bit more about the art side of things, about the rarity of things, and a little bit less about gaming. Do you think that's the right direction? Or do you think we need to push it back straight towards gaming?
No, I think it all adds to the conversation, right? One of the things that we found that when we did Rev and we did Sand, Sand was selling land and doing quite well. but we had thousands of people playing it, right? Like we're not talking about like typical crypto gaming numbers, 3,000 DAU, wow, right? It's like in the gaming
Yeah.
world, it's like in our traditional games we have 15 million users, right?
Yeah.
And that's like we're considered average, okay?
Yeah.
So imagine 15 million gamers going on crypto suddenly, tomorrow or overnight. It's completely, I don't know which network could handle it, but anyway, that aside, right? I think when we issued the token, Sand ended up getting 120,000 owners of the Sand token. And then and that was the language they understood, right? They're like, oh, I can have a fungible token that can be traded, but why, right? So it forced them to, beyond the hype, to study, well, what's the utility for Sand? Why is that exciting? Oh, there's NFTs. What's an NFT? You can buy land. You can develop on that. Oh, a gaming economy. How does that work, right? So in the process of listing a token, we ended up educating and bringing into the fold of the community 120,000 people, which would have never otherwise entered that, right? So it's about bridging this, right? And I think the token is effectively like a virtual currency of any game that's out there, but now has a sort of financial element. And right now when you see all this DeFi movement, right, it has always been about really, with all the food groups and everything, it's really been about the fun and gamification of finance. But I think there's a broader, larger global opportunity, which is around actually bringing finance to games. And I think
Interesting.
that's what I'm really excited about, because, we learn a lot through games today, right? Our children do that as well. But actually, one of the main things we don't learn in school is finance. In fact, most people learn about finance when they get in debt when they go to college. They sign up a loan and they get a credit card. And then they are surprised, what is 20% or 30% APR? And next thing they know, they're like, shit, I've got like debt up the wazoo because I don't know how to repay that. And nobody taught me how to do financial planning because, it's a dirty thing, or I get an allowance. It's all, nothing is financial, right? Why should we not actually play games that have value in economic systems right from the beginning? Because that is how the world works. How much better would the world be if, everyone had basic financial understanding by the time they went to college, right? I think we would all have a completely different ecosystem. We would have more sophisticated financial products, but we would have also more savvy economics out there, because you wouldn't have basically stupid investing because they don't know how to do that, right? So I think that's a big opportunity there. And gaming is mainstream, right? TV and radio or newspapers were one avenue of bringing knowledge to people, but now it's games, and
Yeah.
we can simulate that. And financial education is
That's actually a very
lacking.
fun way to think about it, right? For sure. Like, I've been through the education system. They don't teach you anything about finance. In fact, most of finance I got through either video games, because I was playing World of Warcraft and I was actually really good at the economic side of it, or I got from crypto, because crypto is brutal, right? You make one wrong mistake in crypto, you lose like 95% of your money overnight. And that's happened to a lot of people. And then that's when you have to learn, okay, how to do risk management properly. That's how you learn when you have to. So that's a very interesting thought. But the counter argument here is, now when you have financial assets, real financial assets in video games, right? Then doesn't that introduce like people under 18 to potentially gambling as well?
Well, I mean, I think, is it gambling when people are trading baseball cards, or is it gambling when people are
Mm,
doing
mm,
collections? I mean, and I understand that there's a fine line between that, right? I think the area that excites us is about bringing mass adoption and financial education and real value into gaming through this, means that people can, ultimately play with like, $10 or $5, right? And when you lose $10 and it's 95% of your value, you're like, oh my goodness, I lost 95% value, but it's $10, right? It's like when people play Monopoly and they end up using, or play mahjong, or play card games. It's play money, right? But it's also education, and you get smarter for it over time. Where it becomes painful is when you actually have, more significant savings, and then you start sort of delving into the financial world, which is, by the way, what most people do, because when they actually get a paycheck, they actually have more money, and then they start putting money into some stock they don't understand, and then, oh shit, I lost everything. That it's a far more painful lesson than doing it when you're a child and when you're educated.
And I think that we see that with the NFT space too, right? So we see baseball cards moving on to the NFT space. We saw Wax doing that with Garbage Pail Kids. We saw kind of more of the artsy collecting side. So are you doing anything with the artsy collecting side? Are you doing, how are you using these NFTs right now in your
So I mean, I
projects?
think so for one of the, we definitely are moving very so very very aggressively into the collectible space, because we think, collectibles and art and so on, that's like a $370 billion market, right? I mean, our Formula One car that we sold last year, the first one, the 111, sold for 415 ETH, right? And it's just like a lot of money for a virtual car.
But
But
who
the
would
thing
pay
is,
for that? Like, who in the right mind would buy that? Like, that's
what
insane, right? That's just like,
well, I mean, I don't know. Like, I mean, do you consider what's happening in NFT space now sort of, sensible or not? But I'll get to that point first, because, a Picasso, is worth tens of millions of dollars. Why is it worth tens of millions of dollars? And is it worth tens of millions of dollars to, 10 million people? Or is it worth tens of millions of dollars really to an exclusive group of people who care about the value
yeah,
or provenance of this? And this is where non-fungibles is really exciting, right? Because non-fungibles is a way to create personality, and is a way to create individuality on objects that we can treasure through history, through moments, through whichever, right? It's like wedding rings, right? If I pass a wedding ring from my great grandmother, within my particular family, it's priceless. But the silver that it's made of is not worth much at all if I give that to someone else. So they melt it down, it's worth nothing. But the actual ring itself is priceless within that, right? And those memories are attached to it. That's how value is generated. That's why stamps are worth that much. That's why, like, first edition baseball cards, from Babe Ruth or something, are worth millions of dollars, right? But it's not worth millions of dollars because you have, an active fungible trading market for it, where millions of people will bid for it. It's valuable because maybe only 30 or 40 people who are collectors value that. And then it expands beyond that, right? I mean, that's how Christie's and Sotheby's and the auction markets work, right?
yeah.
So
But
that's
there's also
the
another
thing.
episode. You bring up the art episode, and I think this is one of the biggest debates, because I was very pessimistic about this. I'm a very real person, right? I feel like I'm grounded. I'm like, okay, maybe the first time you saw a car, maybe you can proxy bid it yourself. This happens both in art and probably in crypto, right? Or you can sell an art. I don't believe that all these things are being sold for this amount of money, right? Because
No,
I
but
think.
many are not, right? It's
Mm,
only some have high prices, but many are
mm.
sold generally for, you could say, more reasonable prices. But
Yeah,
there's usually reasons behind it.
yeah, because there's a digital item, right? And the thing is, like, what differs this item from just, say, a simple JPEG I put on my phone, right?
Yeah,
Like, let's say you have a Picasso, at least there's brush strokes on it. At least I know that, this piece of art is appreciable by people on my wall. I can put it on my wall. I'm like, yo, guys, check out my Picasso. That's
correct.
beast,
It's social.
right? It's social.
Absolutely, it's social.
But
Yeah,
an image on your phone, you're like, yo, guys, check out my image of a Picasso on my phone. This is so cool. I spent like $30,000 on it.
yeah. So
And the
that
moment you
doesn't.
say that, yeah, it doesn't work, right? That the
No,
social element
so
is completely lost.
if it's a pure image, then it doesn't have that value, because of course everyone can just replicate it. But the point is that if you know that it's certified original within a community that values it, it becomes valuable as a result. It's like if I have a Picasso in my home, how many people can actually really determine whether it's real or not, right? But amongst those who know that it's real, it's like, whoa, this is like super cool. This is like fantastic, right? But for most of them who don't understand anything about it, it's just another image, right? So again, it's not meant to be sort of necessarily for something that's, especially with art, right? Something that's appealing to every single person, like modern art, right? The way that it
Mm.
sells. Most people look at it and say, I don't really understand what's so great about it, right? Our creative director, Kevin Abosch, he sold a photo of a potato for $1 million US, right? Famously. And the crypto rose was also very, 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 very valuable. It's part of the story. It's the history. It's the background, right? In the case of a Formula One car, it's the 111. It's the very first car ever that's officially Formula One minted on the blockchain. Is that worth $10 or is that worth $100,000? Don't know. But what you do know is that it's the very first car, and because it's blockchain, there can never be another number one car, right? It's like the first edition, certifiable that way. Now, the other sort of point I would make is that we are more and more living in metaverses, or basically in virtual universes, right? So the recognition of that becomes more important to us. In the past, the real world was important. So, I would carry maybe for, our parents' generation might be sort of wanting to wear Rolex, for instance, and some people bought fake Rolexes, right? But the person who bought the fake Rolex, he aspires to buy a real Rolex, right? He doesn't say, hey, I have a fake Rolex, that's great, I'm smarter than you. Most of the time, they're like, I wish I had a real Rolex. but I'm buying a fake one because I can sort of at least say that I'm this or I'm that, right? Um, and with blockchain, that certification is instant. So someone
Mm.
can take a copy of the 111, but everyone in that social crowd, which is everyone who has a wallet or anyone who knows crypto, is going to say that's fake, right? Is that cool? Or do you start looking like a bit of a, bit of a loser because you want to
Right,
pretend you're something you're not?
but
Right?
you spend so much money on something you cannot. Like I guess it's just like, for me, it's the absurdity of the amounts, right? For me, like I would say, yo, look, you collect a card. I mean, in fact, I don't want to be a hypocrite here, because I issued my own NFTs at the start of this NFT thing, like all the way back in 2018, 2019. I created a bunch of NFTs just for fun, to give it out for free, right? Like,
Yeah.
for me, that makes more sense. I'm giving these things out for free. They're like collectible box mining items. I got a pirate box mining. I got another collectible card. These are collectibles, sure, but I never aspired to sell something like that. Even like 111 box mining #1 issue, I never said, okay, I wanted to sell it for millions of dollars, because I don't think it's worth millions of dollars. I think, like,
But that's because you didn't think it was millions of dollars, and that's okay, right? But maybe someone else thought it was worth a lot after
but
they
why?
had it. I mean,
But I
that's how
feel like,
art works.
okay, but like I think the biggest struggle for me is like, okay, for me it's like the functionality, right? If 111 car is like, say, 50 times faster than every other car, and I can race this car and race with this car and beat every other player, that's worth money. Because my past history was with gaming, right? So this is why I connect very well with Yat, is where I designed a monetization of video games, and it was very clear that players didn't want to just be collectors, right? That people paid money to have an advantage in video games. So not only were the collectible items, and this is something you see in across pay to win games, right? It's very, that's pretty much all mobile games right now, where players not only pay for an additional costume, especially in the Asian markets, you pay for more power. So this costume, like in Chinese games, skins equals the power. In Western games, not as much. I mean, you buy a skin in Fortnite, you can show off to your friends, that's great. But in Chinese games and in Asian games, you buy a skin, that skin's going to give you stats. It's going to make you faster, it's going to make you stronger, it's going to make you better. Then you can trash all your other people. And I think that was expected in the Asian market. And this is something that I feel like, if I would spend extra money on buying that car if I'm very involved in that video game and I want that extra speed. But how do you kind of, okay, A, are you giving power for the extra car? And B, how do you justify value if there is no stats attached to it?
Okay. So first of all, in this case, it was an Apex class car, and the Apex class cars do have more power. However, they're not completely sort of OP, as it were, right?
Mm.
Because I think one of the things that when it comes to game design is that if you create a completely play to win environment, then you have it's really difficult, right? People don't feel
It
like
is, yeah.
it just kills the game. So that doesn't really work, right? But what you see with that is that the models that can emerge from that is that maybe you can have better drivers, you can rent out the car, someone else can use it, but someone with more skill in the game can actually sort of maybe beat you as well, right? So it's not just about the power of the car. There is a skill element involved as well, but you have certain advantages, but it's not sort of the complete OP kill, right? Type of advantages. So that's from the Apex class cars. Now, but why would I own this? Well, I mean, if you recall Counter-Strike, right, which is has a very large skin trading business, and some of those skins sold for $50,000 to $60,000. That's not even on blockchain. It's not even permanent, right? Why would you pay that kind of money for a skin? Well, it's because I'm out there killing people with my favorite skin, and people get to see that. And within that community, it became valuable because they knew the guy with that skin is out there. And what was interesting there is other creators would make skins and sell them. And then, of course, they would say, I only make 10 or 20 of them. But again, it's within that Counter-Strike universe. In fact, that's how Wax with op skins started, right? That's where they're like, wait, hold on. We're trading, hundreds of millions of dollars in these skins. Actually, maybe there's something there with blockchain. And that was really the beginning of how Wax started, right? So the gaming industry had this already. I mean, Second Life, right? Its GDP is $200 million plus, right? EVE Online, I mean, for those who know the gaming, its implied GDP is like $60 million. People trading digital assets, right? I think people forget that in the gaming industry, when you look at the BNP Paribas Atelier report, they say $100 billion was spent on these virtual goods last year. And so people are buying them. They're already valuing them. You just go on eBay. People are selling Pokemon accounts, selling virtual gold, World of Warcraft, in 2006, people are, farming and mining that type of stuff. It was probably maybe the earliest form of proof of work. Why would they do that? It's not just the utility, right? It's to show off. It's what we see in the real world. And I think the shift here that's interesting is the value shift, right? Which is that, we from a certain generation, we look at the things in the real world, like where I live, when my friends come to my house, what do they see, that kind of stuff. But we're now also in a more virtual element. Like for instance, my kids, my daughter, she doesn't really care about her virtual appearance. I mean, sorry, her physical appearance, but she cares about her virtual appearance. She cares about how many followers she has on Instagram. She cares about, what people say on that. But she doesn't necessarily want to go hang out in sort of the next coolest sort of, bar or whatever to be seen, to be recognized by, paparazzi or something. It's just more on the virtual side. And so the virtual sort of credibility has risen tremendously, because, and that's the value that comes from that. We're living in slightly different times here. And I think the exciting part is that gamers already spend that kind of money, right? This is not a case of, why would you spend that, right? And the other thing is, as you well know, gaming is a whale market as well, right? I mean, what are people buying in Fortnite? Skins, right? They're not buying anything around utility. They're buying skins. And I think we can probably imagine if Fortnite, and they're probably not going to do it, if Fortnite was offering a skin trading market with actual scarcity attached to it, that much like Counter-Strike, the skins themselves would accrue and increase in value because of who made it, what happened to it. Yep. And this is where the value of non-fungible tokens becomes exciting, because your history and your record is attached to it, right? If I used a pickaxe and I climbed Mount Everest with that run, right, then that pickaxe is super valuable. If I buy a cup from IKEA, it's not valuable. But if I get, Taylor Swift to autograph it, it instantly increases in value, right?
Yeah.
Even though
and
the utility is exactly
I definitely agree. I think there's certain people who get very emotionally attached to stuff. Like, I think it's harder for me to understand because I'm not emotionally attached to items. This is the worst part about me as a person, right? So when I played Diablo 3, I would get these epic weapons, right? You get these really great weapons. And just before I sleep, I would sell that weapon because I know that the weapon inflation is going up. There's a power creep. More and more powerful weapons are being found. So this weapon might be worth $30 a day, but when I wake up, it's going to drop in price, right? The dumpamentals are there. So every day before I slept, when I was playing Diablo 3, I would dump my item. Even though I might have beat the game with it, I might have grown sentimental attached to my weapon. I'm like, screw this. I'm going to dump that on the auction house. Someone else, you go play with it. You go buy it. Right, have fun. Tomorrow when I wake up, I have $30. Right, I got $30. I got $30 of real money, right? And I'll just buy the better item, and that's it, right? So I think that there's a difference there. I think there, and I feel
but I think just on that point, I think that's a very valuable point here, because that's why the auction house failed, because it was inflationary in its design, right? Because people knew that people could just farm it.
Yeah, not just that, but it became the core loop of the game. And I think this is one thing that also is a problem in crypto. I think a lot of people think that trading is fun. We think it's fun, but Blizzard realized that once it became a core loop for Diablo, it killed the game, because now the most optimal way to play Diablo 3, and I experienced this myself, is to play the auction house. You sit there, you go medieval auction house, you play the game, done. Now you're the best person at Diablo. Why? Because you're fucking rich, right? So this is a situation where I feel like this is the biggest challenge to a trading market or transactional market, or Fortnite having this, where if you short circuit the game and make it about trading, because that's one of the biggest powers there. If once trading becomes a core pillar of the game, you short circuit the game, people stop going out to farm monsters. They're like, it's not efficient. I don't want to kill monsters. I just want to play auction house. And then that kills the entire game, because auction house isn't fun for most people. Or not for most people, but for many people. People play games to kill monsters, right? That's the whole point of Diablo.
I think there's two parts, right? One of them is, as a player, right, you can sort of farm, and there's an income aspect of it. We think that's exciting, because there's other people who might buy in an auction house in a place. I think if there's scarcity involved, also you might be less likely to sell, because you think like, well, maybe this could be more valuable, or I can still use it for a while. So that's a trading element. But to your point about sort of, that there's a danger, not certainly for some games, that the auction house or the trading element becomes the main loop of the game, right? I think, to me, that is both a positive, actually, and a negative. But the positive side is that, to me, it opens up a new type of gameplay that hasn't existed before, right?
Mm.
And whether this is going to be a game system that's going to completely change the world, or whether it's a kind of game that doesn't exist today because it wasn't possible before and becomes essentially a sort of large niche, like strategy games, right? Strategy games has hundreds of millions of gamers, right? Like tower defense, that type of game. It's not for people who play Fortnite or PUBG, but it's certainly for a certain sort of group of people who love strategy games. That's a new industry, for instance, right? You have new genres emerge from it. Match 3 is a new genre that was emerged because of the element of the smartphone, basically using the finger and swiping, those type of mechanisms, essentially became really a genre of its own because of smartphone. And so the question here is, will sort of true digital ownership through these non-fungible tokens and sort of a real sort of property rights for gamers, will this become a Candy Crush style new genre that will sort of get a lot of people excited? Or will it be like strategy gamers, where maybe only hundreds of millions of people will say that's fun, right? From a global perspective, right? So we think so because remember, we're talking about a space that is, fascinatingly fast in terms of NFTs. Is like a $300 million market right now in terms of people trading these assets and items in various ecosystems, driven by 150,000 people. It's a whale market for sure.
It is, absolutely.
What do you think this market will be like if there's only 1 million of them, or 5 million, or 10 million? Like we're still talking small numbers here, right? So, and I think sometimes when people talk about, 2.6 billion gamers, they're not going to all play this. That's true. They might not. But what if you get 5% of them to play, or 10%, or hey, 1%, right? That to me is already a large number, right? And many of the big game companies out there, they're not making another Fortnite, right? But they're the leaders in strategy games, or they're leaders in match 3, or they're leaders in simulation games. And those already are billion-dollar enterprises by themselves, right? So I think it's exciting because it's either brand new genre that's going to be a big niche, or it's going to potentially take over the entire gaming industry because everyone wants true digital ownership. And because we're early, both are avenues you can ride for the time being.
I think so. And I think there's a few great discussion points are brought up here. And I think it's like, I think this is one of the most deeper discussions here because obviously Yacht has been in the space for such a long time and we've seen it all, right? And I think I've seen quite a lot of the developments as well. And, there's a certain expectation sometimes I think in crypto games that we're going to immediately get mass adoption, that billions of gamers coming in. And I think it's much harder than we originally thought it would be. That's at least for me anyways. All right. I thought.
No, that's true though. And I think one of the things that we're now doing is, with our experiences with Sand and Rev, is that we're also looking to bring in the sort of crypto community into the gaming and NFT space because there's so few of them, right? So if you think about what's the sort of lower hanging fruit, is it to bring people who don't know anything about crypto into crypto gaming? Or is it about people who already at least have a wallet and are sort of into crypto, into gaming, right? And I think there's a shorter term, lower hanging fruit to go after those guys. And we see this with
make
like
crypto people into gamers. So that's your shortest,
even as a percentile, because even if we manage to get like 10% of the people who have a wallet into gaming, that's 4 million or 5 million people. I mean, and that's not a big number, right? And I'm going to guess that many of them already play some games or another, like yourself. So you have an awareness of it. You may not necessarily be playing it, but if I come to you and say, hey, there's a game in that incorporates these elements of DeFi and crypto, for instance, you might go, interesting, right? Like for you, at least you'll make that match. And I don't think you are necessarily even a small minority. You might actually be much bigger as a number since we're all quite digital.
Yeah, I think so. And I think something that's kind of interesting here. So I was just going to say, I think that's an interesting approach where you kind of convert those people that are already in crypto into gaming. So you're tackling that, you're introducing that. And I think that's something that's easy to do with gaming, especially if the game is easy to understand. I think that's the power of Candy Crush. I think it was very underestimated that it targeted it was very palatable for everyone. So whether you're a 6-year-old granny trying to play that, or you're like a 15-year-old kid trying to play it, at the start, the swiping was very addictive, right? I think we shouldn't forget that. And it's like the game had a lot of very positive rewards that made it pick up. So being able to get a game into the crypto crowd. And something we know about the crypto crowd is obviously that people are ridiculously rich. So we just have a few comments up there. We're just like, oh, the blue wifey made a NFT for himself and then sold it for 15 ETH, right? Like we're selling stuff for ETH as if it's dollars at this current point, where people have, you know, so much ETH, they just spend, oh yeah, it's just 10 ETH right there, just like throw it that down, it's like spare pocket change for me. And I think that's also true, and I think that's a growing market, surprisingly, and I think that's something that's new and starting out.
But I think it's good. Just maybe quickly to interject there, because you know, if you think about how did the art market develop, right? Like if in the Renaissance, for instance, it was the patrons, you know, the Medicis, the rich guys who said, I wanted to, you know, get Michelangelo to basically draw this amazing thing, right? And actually, because they had so much money, because they were essentially the whales of their time, right? They ended up basically sponsoring the arts for their own personal pleasure. And it created an artistic boom that was the Renaissance, where people were sponsored to do this, and then created a new innovation industry because new players got in because of the money. So that's what we have today, right? People got rich because they maybe bet on ETH or Bitcoin or whatever currencies early on, and now they're sitting on this and they believe in the long term, and you know, they've got disposable income and they get pleasure from that. You know, I mean, why do people drink wine? Honestly, I mean, it's like, you know, it may taste good, but is it really worth as much as that they're paying for? Right? It's grapes, right? I mean, it's so that's the thing, right? It's, you need the wealthy patrons in every ecosystem to grow a culture and innovation, and that's what this is. Where NFTs is a form of culture. Whether Blue Kirby is worth 15 ETH or not, don't know. But the person who sold it is like, wait, this is great, I should make more, right? And it inspires other people to say, maybe I should do that too. And there you go. Right?
I think so. I think that's very interesting. And we got someone bring up meme as well. I think meme was a prime example of like one of the biggest NFT hypes. Like it shot up in value because people were surprisingly buying just gifs of like animated gifs of like pineapples or something like that. I saw the art. I mean, I like the art. Okay, I appreciate the art. I'm not the biggest art critic. You guys probably know that. You know, like I'm not an artist myself. It's very clear. I want to appreciate it, but I don't want to appreciate it with my ETH. You know, that's that's the difference. But everyone is different, and I think there is a class of patrons out there. You know, thank you, arigato gozaimashita. You know, thank you for sponsoring this art, making this art world a bit bigger. But yeah, I think it's something to wrap your head around, and I think it's like right now there's a lot of hype, so I feel like there's potentially a lot of greed play as well. People think they can flip this, but who knows, right? Sure. The problem with something like this where you want to do a quick flip is that you might end up, it's a greater fool theory, right? You want to sell it to someone else that will pay more for it and think that they can sell it off for someone else until at the end of the day, they can't sell it off and this entire market just crashes, right? So it's the epicenter of the greater fool theory. So,
but you know, I mean, I think on that part is that while there is an element of that which would feel unhealthy, you do need that to grow the market, right? I mean, if it wasn't for the .com boom, you probably would have, you know, many more years later where the internet, at least the beginnings of the internet, would be built the way that it did. And you know, if it wasn't for, you know, the ICO craze in 2017, early 2018, then many of the products that you're seeing today in blockchain wouldn't have been funded the way that it did. So it's true, of course, right? There's a lot of rubbish out there and one needs to be discerning. On the other hand, it is the money that has gone to these valid projects that are basically pushing the industry forward. That's been true for, you know, I think, you know, for any industry as it grows through that period. I mean, video games went through that as well. I mean, the first boom of Atari, you know, before the whole ET thing, right? It's the same thing. You know, gaming has gone through those cycles time and time again as well, where it's sort of the boom bust. But every time it comes out of the bust, actually, it ends up being a little bigger and a little smarter. So I think that's important here. Yeah.
Cool. I think so. I think that's a good way to put it. I mean, whether or not I want to be involved, that's my personal opinion. And I think that there's a lot of discussion here. And I think this is one of the most productive discussions. I think a lot of people are commenting on the live chat too. This is actually cool. And I think I really appreciate this, yeah, because like something that I went pretty hard on you on is I've always played the devil's advocate, right?
I like that.
I'm very
good
at
I love
discussing
the
devil's advocate. You know, sometimes I go and, you know, push push up a few buttons where I think it's good. And there was a discussion earlier about Gods Unchained as well. I think that was one of the biggest failures in the crypto space too, where it was a clear example. It's one of my biggest pet peeves, where I'm like, they pitched me this project and it was just clear that it wouldn't work from day one. It was like, it was trading card game, but Blizzard made it non-trading for a reason. And then they said, oh, let's just copy Blizzard, and then made it a trading card game, and then voila, your monetization is completely dead, right? You just killed any ability for you to promote and advertise a game, and then they ended up having like what, 10 daily active users instead of 10 million daily active users, because they didn't have any advertising money left after that. So it was a clear example of just dumbasses trying to farm an idea and to.
So
I mean, I'm
so
pretty negative on that, but
I
what's your
understand.
opinion?
And
Okay.
I think one thing that, if you look at Gods Unchained, I think they did build out this initial community. And, while we understand that all projects need to have work, they were one of the pioneers in the space, right? And to push forward the narrative. And, they did raise a good bunch of money. So they're not down and out, right? But I would say more importantly, the
Okay.
lessons they had, right? I think it's the lessons they had also helped us and the other industry people to
But
say,
it was
maybe we should
clear
do it
these
differently.
lessons should not have been, at least this experiment, like the biggest, the beauty of game design is we can learn from mistakes, and this was a clear example where Blizzard chose not to do something. Like they definitely played Magic the Gathering, they definitely realized that it's a trading card game, right? And then made a very conscious decision to create a game that has no trading. Like this was a conscious decision, and I think this was a lesson that we didn't need to spend money learning, right? Like,
well, I think, but it goes back to the thing of sort of, if you think about what was the foundation of the team initially, right? And the foundation of the team initially were not people that came from the games industry, right? So
Let's go
they
and punch them in the face,
they
like, fuck you, idiot, learn gaming, dumbass. Like, well, at least watch a Blizzard talk, okay? Because they're pretty transparent on everything. Like they tell you. But I think I can justify it that way. They didn't have the experience, but I feel like they're a little bit too lazy. I think there was two ways for them to approach it, right? They copied the game and said, we're going to bring trading to it. But the problem is the game already exists, right? So they need to be 10 times better or have a novel kind of mechanism there to entice people to come over. And trading just isn't enough, because trading kills your monetization and your ability to advertise your game. And I think that was a very clear example where this business strategy, you can spot the mistake from a mile away. And I don't think we should have even spent time or effort trying to learn this lesson when this is a clear, from square one. I think, why waste investors' money on this?
Yeah, I think one of the things that one can sort of expect, like what we're experiencing with Sandbox, for instance, is that we don't spend a lot of money on advertising on Sandbox, but because you have people who have a vested interest in it now, they become your marketeers, right? Because the community has a stake in its success, right? And you could say the same could have been true and might still be true for Gods Unchained, because they have a stake in its success too. The only thing is the designing of that. How does a design loop create that from a game that has an economic and value principle from day one, right? And I think when we think about games on blockchain, because it's value, we always have to ask the question as to what makes this experience valuable, or what makes this experience meaningful for the player, right? Which is why we introduced sort of the sort of staking / rental model in Formula One Delta Time, which is probably the only NFT that you can stake for a token, right? Which is essentially a leasing model. And it's supposed to be a way to create that narrative for people who are in crypto to understand the gaming potential as well, right?
Do you want to talk a little bit about what Delta Time is? Because I think that my audience, I'm pretty sure, I'm not sure if everyone's following up on this. Okay, do I just give a little basic intro of what Delta Time is and what you guys are trying to build?
F1 Delta Time, you see the track in the back, but you've got some cool racing cars, is the official Formula One, and with the Rev token as well. We have MotoGP as well, sort of a blockchain game. And it's not just using the official titles in itself. The Rev token is actually going to be a token for all motorsports related digital entertainment, with Formula One and MotoGP as a start. And what we decided to do was to sort of mirror a racing and simulation type game that would have real economic values behind them. And we decided to work with Formula One because most Formula One people tend to have a lot of money and understand money, right? So that's so it's an easier match from a broader adoption. The design in itself, other than racing and creating parts, is based on sort of a collectible element as well. So collection and trading is a key part of that loop. To your earlier point, maybe that is the game. Well, for F1 Delta Time, that was a big part of it, right? And one way that we initiated to sort of scarcity, where we don't issue like millions of cards, which maybe many of these other games had some trouble because they were running out of money, maybe they started selling more of these NFTs and suddenly became inflationary. We set these limits. So for instance, when we sold the crates, we gave it a limited period of time, I think it was less than 2 weeks, to buy these crates of different categories. And then what happened was that when people would buy the crates, any crate that wasn't sold after that cutoff date basically would get burned, right? So essentially the community gets to decide, what is the scarcity for that edition that goes out there. And what was interesting is that people started buying certain categories, trading them around, and really the volume, the market became self-sustainable because the community got to decide what it could stomach, right? Which is an issue with many other games, including crypto games. If they just flood the market out there, then they have no value, and other people will not value them as well. And with land, we see the same. When we sell land, it sells out after 10 or 20 minutes, but we also make sure that we don't flood the market with that. So that's the economic aspect. Now, from a design standpoint, you can win rev, right? And you can sort of win them. You can spend rev to buy these assets, but you can also win with rev. So you have a time trial, which is essentially like a management simulation element. You have actually today we'll have a gameplay video coming out in the afternoon showing the actual racing trial racing games, which looks pretty cool. You can screen in the back as an indication of that, where you can race for skill and you can play against other people and win some rev. But then we have the other element where you can essentially stake your car. And the parallel for staking your car is actually you're renting the car to another player, so he can earn from using the car. And once you stake the car, you can no longer sell it, right? And you can no longer race it or time trial it, but you can start earning passive income. It goes back into the pool that other people can then rent to use to win in the racing pool. So it's a nice little loop where you have the token that's in circulation and the usage is out there. And you can effectively, we've created kind of a solution to sort of NFT double spend. Right? You have an NFT and you have to choose which way to use it. And what's fascinating now is that because the crates themselves are ERC20s, people ended up buying these crates, and we have probably like hundreds of crates in the marketplace right now, where people are sort of just waiting on them for other people to open because because it has value, because we're no longer issuing any more 2019 cars. Even ourselves, we had to buy cars from the market as prizes. And what's happened is that you'll see when you go on like OpenSea, you'll see a car that the Epic cars, which used to go for about 1 ETH, they're now averaging 3 ETH, right? Because not just because of the staking potential, but because there's not that many left out there. But the value principle is, how do we maintain, protect, and create value for the players? Which in a normal game, to your point, like Hearthstone, for instance, is not the case, right? It's not about maintaining value, right? And there's a few companies out there that think about this, right? We think about this. Sandbox obviously thinks about this. Axie Infinity thinks about this, right? So the companies that do well in the crypto gaming world are the ones who really think about value in games. Whereas the ones who think of it more as a gimmick or as a add-on, it's not going to do well because, to your point, they haven't designed value into the base economics of the gameplay.
Yeah, I think that's quite key here. And this is when we saw the first iteration of video games, they just copied the economic model, they copied the whole inflationary model and said, okay, let's make it with NFTs. But obviously the NFTs will just dive in value, and we saw that with quite a few games too. So whether it's God Unchained, Steam and Monsters, even CryptoKitties, there was a constant flux of new kitties being created, so your old kitties got less and less valuable. So having value designed early in the game, I think, is one of the core things. I think this is my biggest pet peeve. It has to be designed from a game, from a core perspective of value retention, and you have to have designers thinking around that. So then this gives a reason for items to be valuable and to be tradable, and for this whole economy to work. So I think that's kind of interesting. So you guys have a racing game, and the cars that are in this game, they're limited in supply. So do you have a situation where, let's say if you have a sudden influx of people coming into this game, they all want cars, okay, but now
Yes.
the car supply is limited. How do you deal with that then?
Well, then you can maybe not buy the car, but you can rent the car, right?
Right.
Through the
But
staking approach, what happens is that you rent the car back into the pool, right? And then we can rent the cars out. So we would make income from the use of the car, but the owner of the car would get obviously his rental related income from that. And they can still play the game, and they can still win or participate or have fun, right? They just don't own the car, which is, by the way, the real world, right? For gaming, for most games, you don't own anything anyway.
Then you go to this example of Hertz, right? You go to Hertz in Europe, and all the cars are out. You know, they're doing a rental company. They have a limited amount of cars. Okay, they're out of cars. Sorry. You know,
Yes.
How do you deal with that? This player comes in. I want to race. Oh shit! Sorry, Hertz. So Hertz are like, yo, hey, sorry, you don't have cars for you. Fuck off.
Well, then
sorry for
rental prices go up. I mean, that's and maybe so. What happens is that for the 2019 edition, that's it, right? It's like we can't make more. But for 2020, right, which is a different set and a different set of races, whatever, you can do that, right? But again, the community of players get to buy that, right? And they get
the
to choose
2020 set is still inflationary. Then are you saying, okay, now we can issue new cars? They're just in a different package, right? They're the 2020 set now.
No, because
right?
you can't race them in the same environment.
Oh, okay. So that's a limitation. Yeah. So like
because now, but the part where I think it becomes really interesting is, can these cars have utility outside of our games? That's what I want to do, right? Because I see NFTs like free trade, right? Not just fungibility of the token, but in this case, non-fungibles that can travel to other game environments. So we've already had a few cases where people were offering the crates or the cars as components in another game. So I can take my game into another world, right? And would that utility be interesting? And in fact, I think that success for the owners of the car would be that if the car can be used in 10 different worlds or 20 different worlds, right?
Yeah, I think that's the other thing, right? The multiverse idea, where now because it's decentralized, you can use it in other games, and I think that's a whole new discussion for another time. I feel like that is way more complicated, because why, if I'm a game developer, I'm making a game, why should I let you have the monetization or bring items into my game, right? Like from a game design perspective, money needs to exchange hands. Otherwise, I need to hire artists to draw a version of your car in my game to fit my artistic style. That incurs costs. And why would I want to do that for free? I mean, essentially, if you let someone else's car come over here, it kills my monetization, right? So I feel like that's...
Yes, I mean, there's a big discussion there. I feel, to me, just broadly, I feel that allowing that interoperability and trading of these assets into other worlds is what's limiting to the game industry. Just briefly put, I think our game industry, even though it's $150 billion, it's bigger than sort of,
the movie industry.
It's huge, right?
Yeah.
However, it's still limited, because just think about something like League of Legends, right? It's the NBA, it's the sport of basketball, and it's ESPN all in one. Okay, so which is actually crazy if you think about it, right? I mean, imagine if this were true today for, I don't know, NBA, where they were everything all in one. And in fact, they were, if I wanted to buy and use shoes inside NBA, I have to buy NBA shoes. I can't use Nike or Puma or Adidas. Yeah. The market shrinks, right? It's a much smaller market. It may seem big today, but what happens if you open it up and create a real open economy? It will be bigger. And our assumption is that by doing so, it's not going to be just 10% bigger, but it's going to be bigger by the order of like factors. So it turns a $150 billion industry into a multi-trillion-dollar industry, because you have so many more participants and so much more creativity. We can't have a Nike of games. We can't have an Adidas or a Puma of games, because that system doesn't exist, because you cannot move objects around. When you have that, we'll have a new sort of economic revolution because of that. That's what we believe.
That's pretty cool, man. That's actually a very, very interesting idea. And I think that's definitely a conversation for another time. I think expanding that ecosystem, and I think that's very visionary in a way as well. I think it's like thinking beyond how the current market forces work. I think this is the balance, right? There are so many lessons from the current economic system, and that's why I was like very adamant about Gods Unchained having screwed up their monetization from the get-go because their game was just too similar to Hearthstone, and at the same time they cut down Hearthstone's monetization. But what I think your angle that you're looking at is building a new economy on top of that and being able to kind of have like rethink the structure of things. And I think that's where we're at now for the whole NFT space. Like, how do we do it? How do we achieve this realistically where everyone wins? Not just say like one company wins because they're selling out of shoes, but how does the basketball court company win? You know, the guys providing the game for these shoes and for the sports to be played.
Absolutely.
How does this whole ecosystem work? So I think that's a really good discussion. I definitely want to say, guys, check out Rev, check out Sandbox, you know, check out all the stuff, check out the NFT space. I hope you guys got a lot of information about NFTs here, and I definitely want to thank Yap for coming in as well. Do you want to have us any ending notes on what you want to talk about, like what you are building as well in your future? I think you talked about Rev already. Are there anything exciting coming for Rev?
Well, for Rev, I mean, you know, we just announced the acquisition of Ninja stickers. So, and we also recently, so which basically puts in Moto 2, Moto 3, and other assets in there. And obviously, we're building that out. The other thing is we also recently announced a partnership with Flow, which is basically the Dapper Labs, the CryptoKitties guys, between sort of Rev and Flow. So we're working closely around that as well. And MotoGP, some of the gameplay will be on Flow, but there'll be essentially a relationship between these two emerging ecosystems. And there's a lot more coming. So, you know, if you go visit our Telegram channel, or if you go basically check out Rev, you know, revmotorsports.com, you know, and sign up, we'll keep you informed on all of our developments.
Awesome.
Thank you for having me.
Yeah. No problem. Thank you for that great discussion. I played the devil's advocate. I hope that was very interesting for you guys, learning about the NFT space, and definitely have a good discussion on this. Thank you guys so much for watching here. This is one of the most interesting live streams that I've ever done, just having someone live come in and have a discussion. I hope you guys enjoyed it. I know there was like a few things with volume being inconsistent. I tried my best, but you know, this can be fixed in post, but it's very hard to fix when during live. So guys, thank you guys so much for watching today. And you know, hope you guys have a great time. I'll see you guys very soon.
Thank you. Bye.
Bye-bye. And let me